Also, a double-digit rally for the S&P over the next year and a half. Is that possible? Well, our next guest says it's a possibility. Joining us now is Doug Sandler. He is Chief Equity Officer of Riverfront Investment Group, live from Richmond, Virginia. And Doug, great to have you back on the program.
Yeah, thanks for having me.
Okay, so we're seeing a bit of a bounce today after that global sell-off yesterday. Does that tell you that there's a lot of resilience in the market? And, of course, that would then play into your scenario for double-digit growth next year.
Well, it underscores the fact that the sidelines are crowded with investors waiting for a pullback. And if you think you're being smart as an investor, saying that the market's up 50% and there's going to be a pullback, I would argue that that's not necessarily smart. It's consensus. That's what we feel we hear everywhere, which is too far, too fast, market's expensive. And, I think there's, the fact that we've rallied a lot from what we would call an event that there was extenuating circumstances, meaning getting to the S&P at 666.
Yeah.
There's reasons we got there that'll probably not be repeated. I would argue that we're not as stretched as people think, and the fact that every pullback is short and shallow, that underscores that the sidelines are crowded with people that, every pullback are needing less and less motivation to jump in.
Right. So so you're saying, so every pullback, there are people coming back from the sidelines.
That's right. That's right.
Okay. So the pullback, then, your baseline scenario for that?
Well, I guess our pullback, the way we're viewing it, is the pullback is likely untradeable from an investor that's already in. So if you're fully invested or overweight equities, it's not worth trying to get out and figure out when to get back in, because by the time those signals are given, it might be too late. You may be basically selling and buying at the exact same level. So for our view, it's not tradable. We're invested. We're actually a little overweight. We'd like to get more overweight at some point in time. But we don't believe now's the time to sell, anticipating a pullback. And
so from here to 18 months from now in the S&P, if you see a double-digit gain there, where do you want to be? What do you want to cycle into then?
Well, our view is, we use a price matters framework, which basically says, the market is cheap even after this recent rally, which means it's likely going to be higher as we go out, next year or the year after. As far as areas of opportunity, our favorites are some of these industries that are probably, would make most investors feel most uncomfortable. So there's stuff like the home builders right now, which have had a rally, but we think there's still more upside to them. Healthcare facility companies, the kind I heard your previous guest talk about, that are right in the bullseye of Washington. Right now we think valuations there reflect valuations like they were back in Hillary Care, 1992-93, which is, very different circumstances. I think the outcome's going to be better. Okay, and Doug, we were just mentioning the Great Reflation. Essentially, that is the title of your latest report. Just tell us very quickly what you mean by that, the Great Reflation. Well, ultimately, we think there's probably, one of the big risks to the U.S. investors is a secular decline in the dollar. That happens with reflation, or basically printing money by the Federal Reserve and the Treasury. If that were to occur, most investors don't have any defense or umbrella to protect themselves from a secular decline in the dollar. In our portfolios, we have roughly between 8 and 10% commodity exposure. Okay. We also have a fair amount of exposure overseas. Okay, Doug, thanks so much. Doug Sandler of Riverfront Investment Group.